Good morning. Here were trading calls done with expiry, starting off a brand new chapter today. Morning, Nikhil.
Aisha, good morning. So after a memorable and a strong September series, we start a fresh October series today. And with the news that globally things are looking stable and calm despite anti-austerity protest, the Spanish government has approved austerity measures. They are committed to cut their fiscal deficit, and that news is having an impact on global markets. So European markets are looking stable. Now reversed after 4 days of straight cuts, commodity prices are looking strong, and Asian markets are also quite charged up.
And because of that, do you think we could scale up higher? Because in the past couple of trading sessions, we've seen the trend wherein the global markets haven't been supportive, but we have held ground. And do you think today, now that the global markets are stable, the Spain issue is out of the way, it could give us the chance to scale up higher?
Yeah, so it will just, make life slightly easy for us. You're right when you say that, and that's my assessment, that the passing of the Spanish budget is more like a risk-on event, and that for sure will help a market like India. But broadly, if I look at Indian markets, I think Indian markets are moving as per the textbook, which is after a big sharp rally, we are consolidating, more and more sectors are participating, more and more companies are now also chipping in. So I think it's good what's happening there. We'll talk about what are the other factors which will drive Indian markets, but as of now, the simple sum and substance is that globally things are looking stable. There is global liquidity. Money is not moving into commodities. Money is not moving into commodity-dominated emerging markets. Money is moving into markets like India, and that is certainly favorable for us.
Okay, Spain is moving towards reforms. We will get your views from Michael Kurtz, that is, Chief Asia Equity Strategist at Nomura, as well as from Peter Dixon, economist at Commerce Bank. Well, we've had the best gain in about 8 months this series, so we will chat about the market perspective and which way are we headed from the levels of 5,700. Sanjay Dutt from Quantum Securities, as well as Jyoti Vardhan Jaipuria, Head of Research at Bank of America Capital, join in and talk about how much more gains left in and where should you be investing sectorally. Lots of technical perspective as well coming your way with CK Narayan, Deepak Moni, as well as Mukesh Thakkar. Not just that, we'll also get your views from Neeraj Gambhir, and we will talk about the borrowing impact on yields and the money markets. Neeraj Gambhir, MD, Co-Head Fixed Income at Nomura Capital India. Well, clearly that's the big story globally this morning, and the Spanish Parliament has passed crucial spending cuts for 2013, hoping to end the recession for Spain with the measures. Now, the highlight of the budget is the massive cut in social spending, which accounts for 64% of the government's expenses. Deputy Prime Minister of Spain said that the new laws will bolster Spain's economy and meet pledges to European Union as well. Now, the government has pledged a deficit target of 4.5% for 2013. Widespread protests have followed across Spain post the unveiled budget. Okay, held out pretty stable for the European markets, but what about the US equities? And S&P 500 index that snapped a 5-day string of declines in a broad-based rally on Thursday. Spain's plans for economic reform eased some worries about one of the Eurozone's most troubled countries, that's Spain. And the S&P 500 index shot up a good 1% on closing, its biggest percentage gain since the Fed announced the plan for a third round of stimulus, or QE3. And the U.S. economic data as well was mixed. A report showed that initial jobless claims, they dropped more than expected. The final read on second quarter GDP in the U.S. as well showed growth of just about 1.3%, which is weaker than expected. So clearly mixed data you'd have to see on the economic front. But on closing bell, the tally looked green, and the Dow shot up a good 72 points. The S&P 500 index rose 14, and the Nasdaq as well gained a good 43 points.
Well, just when we thought that globally things are reversing, equities have managed to bounce back, even though, like Aisha pointed out, the US economic data of late has been quite mixed and quite challenging. Asian markets are holding on, that's important. SGX is up 34 points, that's also quite impressive. And if you look at Chinese markets are at 2056. Gold is at a fresh 7-month high. Copper prices have stabilized. And oil, late last night, oil has also inched up, and it has inched up quite smartly. So as we walk into trade, all the ingredients of risk on trade are clearly intact. Peter Dixon, economist with Commerce Bank, joins us now. Peter, good morning, and thank you for joining us. Peter, Spain has unveiled a slew of measures to tackle this crisis. Do you think these measures are enough?
Well, I think there are a number of issues attached to this particular question. I mean, in terms of the amount which was announced, I think it would probably exceeded my expectations to some extent. It does appear to be a fairly comprehensive slashing of the budget for 2013. But we have seen over the course of the past few days, massive demonstrations on a number of Spain's largest cities. And I think that's a measure of the anger which the government is going to be facing when it tries to push through these reforms. And as we have seen in Greece, there is a serious danger that we could find a split between the ordinary person on the street, if you like, and the direction in which the government wants to travel, which makes it much more difficult to push through fiscal reform because, after all, when it comes down to it, fiscal policy has to be governments acting on behalf of the people and not against them. And I think there's a serious risk of that kind of split developing, which will make life for the government far more difficult.
So, Peter, what is the likelihood of a full-fledged bailout then for Spain?
Well, I wouldn't like to put a time on it because, I would have thought that the Spanish government would by now already have made some kind of formal request. I just wonder whether they're going to try and wait for the Euro Summit next month and try and sell the message to the domestic electorate that in actual fact we've been forced into this by our other European partners. So I think there is clearly a sense of brinkmanship going on here. I mean, we know that a number of prominent German politicians are, if you like, irritated by Spanish foot dragging on this issue, and I think there is a sense that the longer we wait for that shoe to drop, the more markets are going to be concerned. I mean, they're not overly concerned, I think, about the prospect of a Spanish bailout, or indeed of any existential threat to the Eurozone at this stage, because I think there was a general expectation that Spain will go and ask for a bailout, and it really is just a question of when rather than if. And so it rather induces, I guess, a little bit of nervousness into markets, but nothing untoward, certainly nothing like we have seen over the course of the past 12 months.
Peter, final question. Based on the recent events and how things have moved in Italy, Greece and Spain, what is your outlook on European equities?
Well, actually, I remain fairly positive on equities generally, primarily because all of the conditions are in play for a pickup in risk assets, if you like. I mean, for one thing, central banks are supplying a huge amount of liquidity into the market, so that's got to be a positive. And given that investors will get significantly better yields on equities than they do on government bonds, there's certainly an incentive for investors to buy equities simply for the yield rather than for any capital gain. And of course valuations remain fairly favourable as well on the equity market. So I think all the conditions are in place for equities to rally. It may be a bit of a slow haul at first, but I rather suspect that as some of the dark clouds begin to roll away, particularly with regard to Spain, then maybe we'll certainly see some of those core European markets performing reasonably well.
Peter, good having you on the show. Appreciate you taking the time out. Good going for global equities, Asia as well as holding up. The SGX Nifty would just come up for you on your screens. That is a good indicator of how this series is going to kick off. So 5700 is back on the ticker. A good jump start of about almost 38 points. But the question, Nikunj, that everyone would ponder is what explains the kind of fund flows that we've seen in the last month?
Yeah, so it's not some reforms or some hopes of some earnings upgrade which is driving money to a market like India. I guess what we must recognize is that what is happening to other emerging markets, how QE3 money has moved. If I map how emerging markets have moved this year, Indian markets are up by about 20%, Chinese markets are down by about 7%, Brazil is down by about 4%, Taiwan, which is a small market, that market is up by only 11%. So generally, the the opinion in global markets is that in the near term, since commodity demand has come down, China is slowing down, it's time to move out of commodity dominated markets, and it's time to buy a market like India and China. Now within India and China, there are problems with China. So the only one which is standing out to my mind is Indian market. So we must not confuse the economic reforms with what's happening in Indian markets. Economic reforms, for sure, they've changed the mood, but they've not changed the local participation, so to speak. So the way to map this market now is that we must understand that where foreign institutional investors will move. In the first half of this year, most of the global money was moving into defensives and it was moving into predictable sectors. Now that risk is opening up, what we need to monitor is that where the next $4 or $5 billion will move. Will that still move in defensives? Will that still move in IT? Or will that now move into infra and some energy related sectors? I guess there is no easy answer, but you must recognize that all the basic ingredients which are important for this market, I think they are intact. So globally risk on environment is on, China is slowing down, Brazil is slowing down, which is helping a market like India. So yes, September has been a dream run for us, and I sincerely feel that October also, even though October has a bad reputation, I think the gains will extend themselves because of global liquidity.
Okay, a 6.5% gain coming in this series, whole host of upgrades. Macquarie already has raised its Nifty year-end target to 6,600 now. So let's bring in Darshan, because we saw a lot of volatility this series, not in the Nifty, Darshan, but in individual names, what with the F&O exclusions, you had a whole host of index changes as well, so a lot was going around.
Yeah, that is right, but it's been a good month series so far, because the Nifty has been up almost 6% in this series. We've seen inflow to the tune of almost 20,000 crores that have come in the cash market. So clearly a good series. We managed to close at 5650. People were anticipating 5700 plus close, but that didn't happen. But the rollovers pretty much picked up, came in line. But the Bank Nifty rollovers disappointed as far as last month versus and even the 3-month average is concerned. Apart from that, oil, power, cement, pharma, these are the sectors which saw high rolls, and in the low rollovers you had mid-cap IT as well as real estate. The other thing is, as far as this series is concerned, we are seeing call writing coming in at levels of 5700, 5800, and put writing at 5300, 5400. So the range is much higher. Apart from that, what you have to watch out for today, first of all, all the pharma stocks, because of the policy of DPCO. GSK will be the most impacted. The other counters that will be impacted will be Cipla, Cadila, Ranbaxy. So all these counters is something that you would want to watch out for. The Nifty inclusions and exclusions happened today. So Sterlite and SAIL are out of the Nifty, Lupin and Ultratech are in. So they will be there. But the most important thing is we'll have 51 less stocks to deal with in the F&O from today.
Okay, Darshan, we'll leave it at that. Seems like we're headed in for an exciting trading session ahead. Quick break. When we come back, get your technical perspective and trading calls for this Friday morning with CK Narayan and Mitesh.
Welcome back. You're watching Trading Calls live on ET Now. Globally, things are looking quite charged up. SGX is holding on. Asian markets are firmly fixed in the green. Dollar index has corrected, which means as we walk into trade this morning, all the risk indicators or all the risk on indicators are quite favorable. But after a rather rewarding and a memorable September series, what are the expectations from the October series? Let's discuss that with our experts, CK Narayan and Mitesh Chakkar. CK, Mitesh, gentlemen, good morning. Thank you for joining us. Mitesh, before you answer my question that what we should expect from the month of October, here's some data for you. If one maps the Nifty's performance in the month of October from 1994, Nifty has dropped 12 times in last 18 years. So think before you answer.
Well, I don't think we could pick and choose based on the historical data, in the sense that, every month's performance, I'm sure if you would have looked at it, the data in slightly more detail, and you would have, will be different. So, typically people have tried to historically map the last 10 years data and try to figure out where the average movement has been. But the average is only a mean, I think the extremes are totally different. So, I wouldn't really be bothered about the kind of trends which have shown. But yes, I think, it's important to know that 2 and 3 times, the October has been a negative month. Having said that, I think, what we have been waiting for, I think, for some time now, is that whether this sideways consolidation will continue and result into an upward breakout, or possibly we might have a correction before the trend resumes, because if you look at the way the last few weeks of Nifty movement has happened, I think it's clearly pulled the medium term and the long term indicators on an upward trajectory, which typically means that we have entered something which is called as a medium term uptrend at least. Now, having said that, we have already gone up by 10%, and there could be a chance that, any uptrend is not unidirectional, or it doesn't happen in a linear manner. I think, you will have pullbacks, you will have corrections within a slightly broader uptrend. So the immediate levels to look on the Nifty, if you've been observing the last 4 days of price data, I think I mentioned or highlighted this point yesterday as well, is that in the last 4 years, after peaking out on around levels of 5720 last Friday, I think we have on 4 or 5 occasions tried to get past levels of 5700, 5710 and failed on the hourly charts, while on the same intraday chart, we have been getting support around the 5640 to about 5630 levels. So it's a very narrow range of about 60 points. Which direction it breaks out will possibly answer the question. So if it starts trading below 5630, I would suggest that we are in for a correction before we start moving up again. Now that correction can happen. We might see a pullback to levels of 55.50 and then come up again and start consolidating before we move up, or it may be open in a flash, and then we might immediately start and resume the uptrend. The other scenario which I pointed out is that we start trading above 5720 and resume the uptrend. So today I think both the scenarios are open, but the good point is that we only have to wait for a couple of more days possibly with the kind of narrow range that the index has been showing. I think this movement will possibly break on either side. It's only a 70-80 point range, and a market like ours, which has been going through if I could put it this way, a speedier movement than what we have seen in the last few months before, I think will not consolidate for long. So having said that, I think there is a chance of a correction happening, but my sense is that the broader and the medium term trends are on the upside. So even if this correction happens, one, it will be short lived, and I've given you a target of 5550, which is roughly about 100-120 points lower than the current levels, and it will be bought into. So that's the idea. So the overall picture still remains buy on decline, despite the fact that the historical data will not possibly concur with what I've been saying. But this time it does look like that the trend is firmly on the upside.
So Mitesh, on that note, give us your trading calls as well.
Again, I think mostly it's some buy calls. I've got a buy on Titan Industries. I think Ashwini picked up that stock yesterday. It's closed at an all-time high levels, and that's a short-term breakout. Managed to get past levels of 250. So keeping a stop at 246, I would look for a price target of 270, 275 to be tested over here. Yes Bank is on the verge of breaking into all-time highs. In fact, let me just highlight an important data point over here, is that we've never had a weekly closing on Yes Bank above levels of 375, and I think that level has kind of held out for 4 or 5 weeks, and today being a Friday could be very important. So I think we've got some short-term buy signals. So assuming that we'll get a weekly closing about 375, the stock will break into all-time high levels. I would suggest buying with a stop at 371 for a first price target of 400. But I suspect we might see higher levels once the stock confirms the breakout. Now Wipro is a sell. There's some kind of negative price pattern developing over here. Sell below 373 with a stop at 382 for a price target of 355. Dena Bank is a buy. We've seen a lot of activities in PSU banks, and after a couple of days of break, I think all these stocks resume their uptrend. This one can be bought with a stop at 102.75 for a price target of 114. And I've got a buy on Indiabulls Realty. Now this stock for the last 4 days has been kind of failing to get past and close above levels of 59.5, 60, which is also the 200-day average. So wait for the stock to start trading above 60 and then take a position. Keep a stop at 58 and look for price target of 65 on the upside.
Well, Yes Bank, we are so fixated with the HDFC Bank that we often tend to ignore some of these mid-A quality private banks. Look at Yes Bank. Yes Bank this year has appreciated by about 40%. And if I map the 1 year performance, in last 1 year it has appreciated by about 40%. And if I map the YTD performance for Yes Bank, in this year Yes Bank has appreciated by about 60%. So yes, HDFC Bank is not the only bank you need to monitor. There is a lot of price action and volume action in other A quality medium cap or mid-size private banks as well. Let's go to CK Narayan for his trading ideas. CK, in last 2 series, Nifty has appreciated by about 14%. Law of averages are telling me that October could be a tricky month to call.
Yeah, you had this pretty resounding month for September, right? And we have done something close to 400, 450 points as a range or no, it's even more than that. It's about 500 points. We had a low at 52.50 and a high closer to about 500 points above from that. So I think after such a kind of torrid month, it would be natural to look for some amount of consolidation. That's looking at it from let's say logical perspective. But if you look at seasonally and if you look at it say maybe historically, October has always been a very significant month where it has the tendency to form tops and bottoms much more often than most of the other months in the year. So I think we should keep at least about a 25-30% chance open that we may see another large month. Maybe not to the upside, maybe to the downside as well, that we don't know yet. We are all bullishly biased right now because the momentum is actually carried even our individual sentiments to the upside. So we're all expecting up, but then to expect another 500 point to be on top of the existing 500 point, that would actually call for some extra dose of bullish spirits. Not that it is out of the ordinary, because you are seeing the kind of reactions that the world markets are making to even token efforts made by people out of Europe. Spain came out with some small changes in budget where they are talking about spending cuts and not taxing, which is very positive, and the market reacts immediately upward with flourish. Okay, the jobless data claims had a little bit to do with it, but I think most of the reaction was to what Mr. Rajoy did. And today morning we read about something happening positive in Greece. So I think if the European theatre were to show signs of mending itself, the world as a whole takes a much more positive view, and then you are seeing a kind of positive fallout across the globe, since most of us post the Lehman days have become completely correlated. I think that will transpire into Indian markets also remaining on the up and up. We have FI inflows which are very, very consistent. I think the last I read is about $14–15 billion already, notwithstanding the large amount coming from Kane, but still it's been a pretty good month as far as FI. So I think if you take all the macro factors around, they're all indicating further positiveness. If you notice, US and Europe actually snapped a 5-day declining streak in the last, with the up move of last night. So I think being a Friday traders, they also would want to square up short. So it's a fair chance to consider that US Europe will be up today. And I think our market traders are smart enough to read that, and they'll probably push up the, our own index, which is probably why, the SGX Nifty is trading even higher than where we closed, the October series. So between the expiry of the September and the start of the October, now we are going to have a fairly large size gap, which being a Friday and with most of the positions having got washed out through the expiry, I think we should be having a pretty decent day today. And I would think that would spill over nicely into the first week of October at least. My, let's say, time count thing indicates that we should be up till about largely around the first week, the 5th of October. That is where I'm expecting. So that's well into the next week. That is where I would expect the, let's say, the present uptrend to maybe make a peak out. And I have a target there somewhere around 5810 to about 5840.
Okay, CK, hold on to that thought. Lots more individual stocks as well to chat about. But first, let's bring in Manisha and talk about which way the commodity markets are headed this morning. Manisha.
As all the other asset classes, Aisha, we've seen the commodity prices also gain up after Spain has pledged to cut deficit, and that has eased a bit of Eurozone concerns, and we have seen some money flowing back into commodities. Take a look at the gold prices. They have hit record highs, not just in euro, but in Swiss franc as well. The central banks moving to boost growth is something that is devaluing their currencies, and the money is flowing in that sense into a hedge, which is gold in this case. Also, if you look at the gold prices, they have gained 11% in this quarter and up nearly 13% for the whole of 2012 now. Markets really are looking at the fact that China could be coming out and releasing more monetary stimulus is something that is keeping other commodities as well on the higher side. Later is the case with crude oil headed for a biggest quarterly gain for 2012. We have seen the crude prices gain up by nearly 8.5% in this quarter. The month of September hasn't been so good. You have seen 4.5% of decline coming in, but that's majorly because of the inventories increase in US and the consumption going down. Also, OPEC is talking about cutting output now as China has declared maintenance for most of its refineries. That is something that also is supportive for the prices. Good gains coming in for the base metal sector as well. Copper prices are posting 6.5% of gains in this quarter itself. You have seen support coming in from the fact that the LME inventories have declined 40% in this year itself. That has been supportive for that sector too. Let's also listen into Pranav Mer and Paradigm Commodities for their strategies for the day today.
Gold futures holds very strong support around 31,180 levels. If this support level is breached in next couple of sessions, we could see gold prices declining to around 30,000 levels, and below that around 31,000 levels, and below that it can even test levels of 30,800. So we advise selling in gold futures only below 30,180 and with a stop above 31,300.
Manufacturing slowdown in developed world and as well, and China looks bearish for metals, especially copper looks vulnerable to downside. I think I would prefer to go short in copper around 447 with a stop loss of 456 and downside objective of 430, 433.
Okay, from commodities, then let's chat about the stocks which are in the headlines this Friday morning. Megha and Navneet are waiting by. For more on that, Megha, you go first.
Well, Aisha, very good morning, and look at Reliance Industries. The company is keen on tying up with a Venezuela-based company for a project in the heavy crude belt in Venezuela. A lot of companies with sophisticated technology are looking at refining heavy crude oil, and Reliance Industries happens to be one of them. So look out, keep an eye on the counter. It's trading about the 20-day moving average. Also look out for ONGC, and ONGC and Terry Biotech have formed a JV to bid for a contract worth 15,000 crore. Now this contract essentially includes cleaning of the desert oil slick in Kuwait. It's a big contract for ONGC, a positive for the company. If you look at the counter, it's slipped below the 20-day moving average, has cracked close to 2% in the last 1 month. And do keep an eye on the entire pharmaceutical path. In an important decision, the UM has decided on the pharma pricing policy and has sent the recommendations to cabinet for approval. The suggestions include putting 348 drugs on the NELM list, which essentially means that once these drugs are on that list, they would not be allowed to sell the drugs at a price higher than what is decided by the government there. These drugs essentially have a market, have a sale of close to 29,000 crore annually, and have a market of close to 60% of the domestic market is comprised by these drugs. It's an important decision coming in for the entire sector there. It is a negative for big pharma companies like Cipla, Ranbaxy, Lupin, Cadila and the likes, and all the companies with a market share, with a brand share of more than 1% will come under the purview of the NLEM list there. So keep an eye on these stocks.
Megha, thanks for that. For some mid and small cap stocks, let's go to Navneet.
Well, Nikunj, keep an eye on the entire fertilizer pack today as some bit of positive news coming in there, as urea prices could go up by as much as 10% next month. The Union Cabinet would be meeting to consider the proposal which has been already sent to them. Well, the industry says that they need a hike of almost 40%. Remember, there has been talks about decontrol of urea prices as well, but that has actually been kept in abeyance. So you can expect some kind of uptick in these stocks today. Keep an eye on Chambal Fertilizer, RCF National Fertilizer. And moving on to LIC Housing Finance, well, reports suggest that the company has hired 5 banks for its institutional share sale to the tune of almost $250 to $270 million. It has hired vendors Citi, HSBC, Kotak and Nomura for its share sale, which may take place in the coming few weeks. And if you look at the counter, it's given return of almost 10% in the last 1 month. And lastly, keep an eye on Indian Hotels, some respite coming in there for the company, as it has got 1-year lease extension by New Delhi Municipal Corporation. Well, the company has got 1 month to auction its Taj Mansingh Hotel in Delhi, and it has also got the right to match the highest bid in the auction. So keep an eye on that counter as well. That's given return of almost close to 17% on YTD basis.
Okay, Megha and Navneet, thanks as always for joining in and walking us through the stocks which are in the news this morning. Quick break on that note. When we come back, it's reviews from Manish Ramania, Head Institutional Equity at Emkay Global Financial Services.
Thanks for staying with us. You're watching Trading Calls live on ET Now. Asian markets are holding on. SGX has picked up some weight in last 5-7 minutes of trade. Dollar index has it has corrected. I wouldn't say it has plunged, and global volatility has also come down. So globally things are looking intact. Globally, risk on trade which was getting challenged early this week, looks like that risk on trade is intact. So let's connect with Anish Damania. He represents Emkay Global Financial Services. Anish, good morning. Thank you for joining us. Anish, Indian markets are up by about 25% plus in this year, and they are up about 8% already in the month of September. Do you think this is as good as it gets, or we still have some more headroom left?
See, because everything depends on how the flows are going to be, and this is something which I'm not able to predict. For example, over the last 3 days, we have seen a lot of arb-based buying, in the sense that the arbitrageurs converted their Nifty futures long position into cash. So they bought the cash basket of Nifty and sold the futures which they had against that. And that was a combination of two factors. One is that the rollover cost was about 30 Nifty points, plus the NDF was trading at a discount. So they were basically getting a benefit of both the currency gains as well as this rollover cost. Besides, what I understood is that the cost of funding also had fallen. So if you look at it, the last 3 days flows whichever have come in have mostly been arbitrage led. So you saw a huge large cash position buy in the market. At the same time, we didn't see that much of a sell figure, because I would believe that most of the people are taking positions in India by buying other people are buying the Nifty futures. So that's why the sum total was not that great. So as we ended this expiry and began a new one, the kind of adjusted Nifty positions are simply much larger than what they were before. So we go into this next session in a little bit of a bullish mode.
So are you bullish? Are you bearish? I'm just trying to gauge your assessment then.
See, what I'm trying to say is that everything depends on how the flows are. So far the flows are looking okay. So you might see this rally sustain a little bit of momentum for a few days. However, I always believe that it's the fundamentals which take over at certain point of time. We are not seeing anything on the ground which is becoming positive. In fact, if at all, the costs are simply going up. The so-called reform measures are just pushing up the costs for everybody. So to that extent, we are going to see two things. One is a slowdown in consumption as the costs move up. And hopefully, if it is not compensated, let's say by the increase in the capex cycle, then we are heading towards a still lower GDP. I don't know whether that's good for the markets or not. Definitely, history has proved that if earnings don't grow and if they continue to decelerate and GDP is on a downward trek, the uptick in the market momentum doesn't last for long.
So Anish, at a time when you're confident that there are strong flows and the earnings upgrade based on the economic conditions are unlikely to kick in, what is the best way to make money when momentum is still looking strong?
Yes, you see there are quite a few stocks which one can sort of still look at. There are certain names in pharma which are still going to show you about a 20% kind of plus growth. Cadila and Cadila is one such name which we are betting on. Lupin is another name which we are betting on. So that is one segment. The second segment is also the IT services sector. I think post the results of Infi, once again you start seeing interest coming there as the numbers will show that things are not probably as bad as what most people paint it out to be. Third way to play is the power sector. We feel that a lot of things are happening in the power sector, and to that extent you have plays available there. Reliance Power is one of our good bets. We are increasingly tilting our bets towards Tata Power as well. So what we are trying to do is within the sectors which have beta names, we are marketing more of those names. Within the banking sector, we have strong reasons to believe that a bank like United Bank will probably do well as we go ahead. So over a period of time, what we feel is that the market is continuously acting as a sieve, and it's is weeding out all the weaker companies in every run up as well as a correction downwards. And all the better companies are getting valued. So that's why you are seeing this huge polarization in terms of valuations of the quality companies versus not so quality ones.
Okay, Anish, hold on to that thought. We'll slip into a quick break with news that the SGX Nifty is at 57.18 this Friday morning. When we come back, we'll get your views from Michael Kurtz, Chief Asia Equity Strategist at Nomura.